After a week-long hiatus, tech trader Sean Udell is about to join us once again. Good morning, Sean.
How you doing?
I'm doing well. How are you, man? We haven't talked to you in a
I'm
couple
good.
weeks.
Pardon?
Said we haven't talked to you in a couple weeks.
Yeah, well, we missed a week last week. Trade environment, short-term trade environment's been really good. So unfortunately, been a little busy.
Well, and that's okay. I do want to get your take on the Nasdaq. And last week we saw highs in the S&P and I believe the Dow as well, but we did not make new highs in the Nasdaq. So have we peaked out, or do you think this is a little bit of a pullback and getting set to reload?
Well, it's hard. I mean, the struggle with this market's kind of hey, not to repeat myself, but I'm going to. So we've basically replaced the FANG condition of last year with the cloud bubble condition of this year. So the question really is, do we get a set of circumstances that comes into place where small and mid-cap growth or small and mid-cap value, or really both, really, I mean, in fact, small and mid-cap growth is pretty much value now. That's how cheap it is. So do we get a set of conditions, i.e. something more positive on trade, which I kind of think is coming, by the way. We could talk more on that later. But do we get a set of conditions where people can rotate money out of what they're hiding in? And Mike Wilson of Morgan Stanley, I felt like, he and I are kind of on the same page at kind of key points. He was one of the few guys warning about the kind of dangers of the market last year when FANG was at highs late in the year. And he kind of came out with basically the exact same call, which is the exact same call this year, which is, people are hiding in what they perceive as safe because the stocks don't seem to go down much. In fact, they go up a lot. But in fact, the stocks are anything but safe, and they're incredibly risky, and the higher the prices go, the riskier they get. So, the bottom line is that's the condition we have. The averages are up they're not up because lots of stocks are going up. They're up because a very small number of stocks have gone up a tremendous amount. So that's, I don't think we've hit cycle highs in the market. I mean, an S&P of 32 to 3,400 wouldn't shock me. A Nasdaq that's quite a bit higher wouldn't shock me. The problem is we lost 5G leadership. We had 5G leadership early in the year. Well, really until about it almost ended 2 points. One, you could look at the point at where the Russell sort of hit highs for the year. I want to say that was early mid-March. It was quite a while ago now. Or it literally ended, and I think it was kind of coming back. It ended on when Huawei was blacklisted. And ever since Huawei was blacklisted, lots of stocks have traded poorly. Now, it's not like they're terrible. They've kind of just given up nice moves that they'd already put in for the year. Again, we're in kind of one of these periods where, do you want to try to own what's working for the next 5 minutes, or do you want to try to own which stuff that might work for the next 5 months or next 5 quarters? And that's always a challenge. But as far as the Nasdaq topping out, we could have an interim top. In fact, I mean, June 20th could be a top if you go back and look at the day Okta top, the day Zoom might be a stock everybody should watch, even if you're trading short term. Just literally have Zoom on your screens and watch it trade, because how Zoom trades will probably kind of other things will probably echo that. I mean, Zoom got to like 70 times sales. So anyway, you round all this up. June 20th, I believe, was a day. Zoom's probably down 20 points from that day. CrowdStrike is probably down a similar percentage. It's not 20 points. It's probably 10 or 15 points. Just, pencil in whatever highly valued cloud bubble name that you want to put in there. And I believe the morning of June 20th was the high for most of those stocks. In fact, I don't know if really much let me just double. Yeah, I mean it was almost the opening print on that day. By the way, I mean Viv's another one. Viv's come down. I mean it's a lot of points. It's not a lot of percentages yet, but they've come down from 173 to 160. Again, that's a lot of points, not a lot of percentages. So anyway, we go on and on and on. But it's kind of the same. It's the same story. The question is, what moves the Nasdaq for the next 2 quarters? What moves the Nasdaq for the next year? I actually think I mean, you can only as great as momentum is if you like momentum. And there have been periods in my life where I've liked momentum a lot, as long as it sort of even has a modicum of rationality. I can usually stomach it, but when it goes completely lunatic and irrational, then I become anti-momentum. And but we'll see what happens. But I think there's a very good chance 5G, some semis, hardware, cheap hardware. I mean, if you sometimes you just have to create scenarios. And the easiest scenario I can think about is, okay, lots of stocks have been sold off since the Huawei blacklist, whether rational or irrational. But let's just say you get a China deal, and let's even say China is not removed from the blacklist right away. My guess is, though, if you get a pretty firm China deal, Huawei probably gets some relief. They probably get off of blacklist, but are more on a kind of a restricted trade sort of situation. But anyway, if you get a China deal, you just have to think where these stocks are going to trade. Now, a lot of people were really hoping for a China. I mean, how long has this Trump trade thing been going on now? I think we've been talking. I think this has been affecting stocks for at least 4 quarters, maybe more. I want to say it started early 2018 actually, but it was more just sort of China trade dispute discussion. I don't know if anything really had come out. As far as firm decisions and things, you might have had some early tariffs on some stuff back then. But I mean, this has been going on for a long time. And so the other thing I always look for is, okay, at what point, it's one thing for stocks to sell off on 2 or 3 times on the same news the first 2 or 3 times. It's another thing for stocks to sell off for the 15th or 20th or 50th time on the same news. And we're kind of about that point. We're kind of about that, whether it's the 15th or 25th or 50th time, we're somewhere in there. We literally where stocks have kind of selling off on the same thing, on the same fear, and so on and so forth. So we'll see what happens. I mean, I don't, how far can they stretch the rubber band? And so I'm going to round all this up with Slack, because I definitely want to talk about Slack. I think Slack, ticker symbol WORK, is going to become a very, very large company. I feel very similar about Slack today as I felt about Splunk and Workday and Palo Alto and ServiceNow in 2013 and 14. There are a lot of differences, and we could talk about the differences. The main difference being, I wish Slack probably should have come public about 2 or 3 years earlier, but it didn't. So where Workday was a 8, 10, $12 billion company, something like that, and Splunk was a $4 to $5 billion company. Slack is at 40, it was a $20 billion company. At a rational price, it would probably be about 10 to 15. I mean, I think it's already 18 billion or something. So the market cap is coming down. But what's interesting is about Slack is if there's a stock that people should be going nuts over, or at least wanted to make a kind of a fundamental case to go nuts over, you could probably make a pretty good case on Slack. But what's funny is, since Slack came out after Beyond and after Zoom and after CrowdStrike may have been sort of the most hyper I've seen IPO trade. But since it came out after those things, it actually trades at a much more rational valuation. Now, it's still pretty nosebleed. I'm not saying it's not nosebleed, but it trades quite a bit more rationally than Zoom and then you could pencil in, 15 or 20 other cloud names that are older. So we'll see what happens. But like I say, this deal I strongly suspect Slack will be able to grow into its valuation pretty comfortably, just as Workday did, and just as Splunk did, and just as Palo Alto might not be the best example. They actually were cheap because they had a Juniper lawsuit against them. Maybe ServiceNow would be a better example. Maybe some other cybersecurity. CyberArk would probably be another good example. CyberArk's never been cheap. Well, it was pretty cheap about 2 years ago when it was a focus list name after it traded terribly for about 2 years. But when CyberArk came out as an IPO, it wasn't cheap at all. It was pretty darn expensive. So anyway, I mean, Slack is, in a way, will probably end up being kind of a key IPO, meaning from a time point, from a cycle standpoint. Slack may have come out very close to the peak of, time will tell. I mean, if Okta ends up going to 200 and Zoom ends up going to, to 200, well, then this calls off. But, Slack could end up coming out at a time where it coincided with the peak of the IPO valuation and the cloud valuation. We'll see. These stocks have a ton, I'll end on this point right now, these stocks have a ton of earnings risk at this point. So they kind of got away with being extremely highly valued for the last couple of quarters. The December sell-off helped tremendously so that you had a huge sell-off, made very expensive names seem palatable again, then they crushed earnings. Well, then they doubled off of December lows. I wouldn't say December low was sort of a valuation low. And some of these stocks have gone three-bagger off of December lows. So now, and everybody sort of believes, hey, if they just keep beating, they'll keep going higher. Well, you get to a point where, a stock beating doesn't go higher anymore. And I'd be pretty surprised. We'll see next quarter, but even last quarter was kind of a lot of stocks traded down on good reports. They just ended up started going up again, I don't know, probably a week or two or three after they reported. But yeah, it's still a very strange market. But I don't know, there's something I've seen that's changed in the texture. There's starting to be more bounces on cheap stocks. A lot of stocks have hit levels where, they've gotten bad news. They kind of quit going down. That's one of the things I always look at. You have seen some sell-offs in some of these cloud names. But yeah, I mean, we'll see. I sort of think until I'm proved wrong, I'm gonna say that Slack may have IPO'd into sort of the valuation top of the cycle. We'll see. That's kind of my thinking right now. That's my call right now. The earnings setup, we're still a few weeks away, but these stocks, if they don't sell off materially in front of earnings, I think you have a tremendously risky setup for most of these names as going into their reports. So we'll see.
So what makes Slack so compelling to you? Is it a lot? Does a lot have to do with the tangible addressable market that it has and where they actually are in that right now? Because there seems to be a lot of runway.
Well, that's one of them. But here's just the simple math, and I'm going to do this right now, real time. So on a growth adjusted basis, I did my Slack workup literally the day they came out. But I'd already looked. I mean, I've known about Slack for a lot of years, and again, I was hoping this would come public earlier. But on a growth adjusted basis, just as one comp, and I mean, I would say, Slack's got as long of a growth runway as Zoom. In fact, they probably have a longer growth runway than Zoom. But we don't need to get into the nitty gritty of that and why. But on a growth adjusted basis, Slack is trading at a 37% discount to Zoom on growth adjusted basis. The other thing I would say is from current prices, I would say that the setup for Slack from an earnings perspective, again, they came out S1, projected numbers, all that stuff. Just me looking at the projected numbers, I think they're pretty skinny. And meaning I think there's pretty good runway for them to beat numbers for a while. I mean, you could have said the same thing. I mean, I arguably probably should have been long Zoom ahead of its first earnings report, because I pretty much knew they're gonna crush it. It's just hard for me to buy a stock. I don't know what it was. I think it was 58 times sales, and it went to 72 times sales. So I mean, but yeah, just on raw numbers, Slack is cheaper. It's nosebleed, but it's still cheaper. 21 times forward is cheaper than 32 times forward. And then but more compelling is if I look at Slack versus again, on growth adjusted basis, it's really not trading that dissimilar to like an Adobe here. It really isn't. Adobe's a tiny bit cheaper, probably 15% cheaper. But again, I have metrics and all these things. It's cheaper than Vive. I mean, here's just some of the stocks it's cheaper than. It's cheaper than Zscaler. It's cheaper than PagerDuty. It's way cheaper than Okta. It's way cheaper than Zoom. It's quite a bit cheaper than Team. Again, way cheaper than Vive. About the same as Mongo. Cheaper than Coop. So I mean, you go down the line, and this is an IPO, and so a lot of times an IPO sort of comes out hot, comes out expensive, maybe trades a little bit, then they jostle around, and then they kind of have to prove it. So it's not uncommon for an IPO to spend most of its first 2 to 4 quarters sort of proving the valuation, right? So that's exactly what Splunk did. That's exactly what Workday did. It's exactly what ServiceNow did. I think the odds of Work sort of justifying the valuation are pretty good. Whereas, we'll see. We'll see where Zoom ends up. We'll see where, some of these other names end up. I mean, put this way, I think Work is a lot like Okta. I loved Okta at IPO. The only difference is Okta was a way better buy. Okta at 26.30 was a way better buy than Slack is here. But I don't think Okta can become nearly as large of a company as Slack. So then you want to get into things like TAM, things like penetration. Slack has really only penetrated kind of one vertical. I mean, but part of the reason they have such a large revenue base is because, and they again, you're talking about a company that has like almost $1 billion of cash at IPO, and again, that's why it's a direct listing. They didn't need any money from the IPO. So, you kind of add all this stuff up together. The viability, the durability of it looks very strong. Again, the only thing I don't like about it would have been nice if they would have IPO'd at a lower valuation, so the public market could have got some of the last growth. I mean, the stock's basically, I think a year ago or 18 months ago, the private market valuation was half or less than what it is now. I don't like this whole thing where companies stay private for longer. But again, if you look how weirdly stocks trade, you can't blame a lot of these companies. Again, there's all sorts of huge structural inefficiencies and problems in the market with how stocks trade, how they're valued, how they react to news, things like that. I think there's a lot of companies that are like glad they stayed private as long as they did, because it would have been much harder for them to succeed being a public company and having the pressure and getting your stock tarnished if you happen to miss a quarter or something like that. They can focus on long-term growth. But no, the TAMs are very big. Again, they attack the main vertical, which is the hardest vertical, which is basically the enterprise market. So companies that use Slack get deeply embedded in it, and they pay for it, right? So I wouldn't say Slack is a huge like the free platform of Slack has a massive amount of growth potential. I think there's a huge runway for international. There's just there's lots of verticals that they really haven't penetrated. There's lots of companies that don't really embrace it yet because it's that they're a Microsoft shop or they're an Oracle shop or that they use some kind of system already for communication, and so they don't want to adopt. Put it this way: the very largest enterprises will probably still have a huge amount of room to implement Slack deployments. So Slack is kind of put it this way. I bet if you looked at all the cloud companies, I bet they're all heavy users of Slack, or let's again avoid saying all, most of them. So again, the Zooms, the PagerDuties, the Oktas, and then even the IPOs going all the way back to the 2013 lineage. The Splunk now, Palo Alto, Workday, etc. They're probably all pretty heavy Slack users, most of them. Whereas companies like some of my old companies, really large U.S. companies, some of the largest companies in the world, probably are not using it much yet, and they'll get drug into it. They'll start testing it. They'll start using it in work groups, or they'll start maybe a division or a cost center will start using it, and they'll kind of test it out, and they'll realize, hey, look, this is really good. So yeah, I mean, so even at 20 billion, again, the only reason I don't have a large position in it is I'm waiting. And I've kind of had more of a trading mindset on it. I also didn't. I thought it would go lower. I said, 34 to 38 was my initial range. So I mean, if I say that, I probably, 34 to 35 I think there's a pretty high probability of catching the stock there or lower. But no, I think this is going to be a very large company. Like I say, it feels just like Workday. Workday took a while, but for my people who are subscribers of mine, well before briefing, they made a lot of money in Workday. They made a lot of money in Splunk, made a lot of money in CyberArk, all those names. So I've kind of been waiting for an IPO like this. I mean, the problem is I really like Elastic. So that would be another name that I view as a very long runway, could become a much, much bigger company. The
What's
good
that
thing about
ticker, John?
Elastic, ESTC.
Yes.
Good thing about Elastic is even at a pretty rich valuation, it's a $5.5 billion company. So you can catch them quite a bit earlier in their sort of their growth curve, their development cycle, if you will. And by the way, I mean, let me look at Elastic here. I mean, it's expensive, but Elastic trades at about a 50% discount to all these other companies I just rattled off. So it's still very expensive, but hey, it's half the price of all the most expensive names. And I like the fact that this correction, this mini sort of cloud bubble correction we're seeing, has pulled Elastic down. So we'll see. I mean, I really like the company. I'd like to own it. Usually I own a piece of a company if I really like it, even if I think there's price risk in it. But I still want to own some of it. It's still expensive enough that I'm sort of avoiding it for now. But it's probably within about 5 points where I'd start thinking about taking it long. And much lower, low 60s, I'd probably find it, really compelling. But that's a good example. I think Elastic is probably something that I feel very similar about. I mean, honestly, again, the name, if you look at Twilio, I probably underestimated their TAM. I don't want to get into a big Twilio discussion again, because I mean, I nailed that cold. I just didn't stay with it long enough. Frankly, there was some reasons I kind of got spooked on it. Hey, we're all human. But I think if you look at Twilio, and in just on sort of a metric, if you believe Twilio is worth 18 to 20 billion in revenue, then it's very easy to say Slack is worth roughly the same. So because I think we'll see. We'll probably see within a few quarters. I don't know how many exactly, 4, 6. I'd say probably inside 8 quarters. I wouldn't be a bit surprised to see Slack basically get to the same revenue, the revenue revenue rate that Twilio produces annually. So they're I don't know, on a like basis right now. They're probably doing about half the revenue that Twilio's doing. So I wouldn't be surprised if you see Slack sort of catch up to them. And so if that happens, Slack ends up being a way better value. Let me just double. So yeah, I think that's about right. I think Twilio is supposed to do about 1.1 billion this year. I think Slack's supposed to do about 600 million. So yeah, it's about half. But I think you'll see Slack. By the way, it could be. You have to put some pieces together, but you could make a case that Slack could potentially be a competitor to Twilio down the road. They'd have to do some things. They have to make some changes. They'd have to, they really only have one product. So that's the other thing. You see when companies come out like this, they usually build their initial success on the backs of one product. That was Arista Networks. That was all these guys. Workday. Workday originally had their one product. Now then they operate in 4 or 5 verticals. So, that's probably going to be the next step for Slack, I'd say in the next year or two. They'll probably broaden the product pipeline. So, but no, it's a very, very nice name. Like I say, it's hard for me. I mean, what is it trading current revenues? I always look at forward. So on my numbers, Slack's basically 21 times out year. That probably means it's about 35 to 40 times current. Yeah, I can't think of too many times I paid that much. I mean, so I try to get these things as cheap as I can. I mean, I thought Splunk was crazy expensive at like 15 to 20 times when I was buying it, at $28, but that worked out really well. Workday was even more expensive than Splunk in the early days, but again, that worked out really well. So I just, but I'm not a believer just because now it's accepted to pay 20 times or 25 or 30 times that I'm going to do it, because I know what companies do. That historically those valuations have not been sustainable. So then why you have to assess, okay, if a company, like, in other words, here's what I think Slack's going to do. I think it basically will grow revenues, again, just as Splunk did. I think they'll grow revenues faster than the stock price appreciates. So what'll happen is that 21 times X out year will probably become 19. Then it'll be 18. Then it'll be 17. Well, but if they really go great guns and grow revenues faster and the stock does fine, you could get it down to 12, 14, 15 times, which would be, roughly palatable or equivalent to a lot of companies that have bought in the past. So, but that's basically my case. Without belaboring the point, I think Slack has a very high probability of growing into its high valuation.
All right, and so what levels are you looking at to get involved in Slack?
Right now, I mean, it's pretty much still where I posted.
35-ish?
Yeah, the lower end of that 34 to 38 range, so 34, 35. I've been toying with some trades. I traded pretty well the first day. Caught a really fast, easy trade on it. Kind of looking at it here though, it's almost kind of like wrestling with the turn. It's like this morning. It was a very, very nice. If you're really in it fast, you clip it, but it hasn't done a whole lot. But you almost want to see a morning where it doesn't gap down. It's kind of been the trade lately has been they basically kind of drop the bid on it first thing and then pull it lower. So it's almost like you kind of want to see just the tone change a little bit.
Uh-huh.
The other thing that would help is, I mean, the lower all these other stocks go, the better it is for Slack. I mean, the one thing that's happening, Slack isn't dropping nearly as fast as other stocks are. So that's the other thing I'd like to see. I'd like to see Slack still go down, but sort of drop more slowly than, let's say, some of the most expensive stocks are. So, but yeah, right now I'm kind of looking 34, 35. This is for investment stake purposes. Lower is better. I mean, really, then the IPO was I think the IPO would be pretty fair on this thing. So 26, I would be pretty shocked if it traded much below 30. Put it that way. I think that in fact 30 to 32 is a number where I'd probably start getting moderately aggressive on it myself for a larger position. So yeah, we'll see what happens, but I like it. Now, so let's backtrack. Do I like it as much as like 5G names? Probably not. Do I like it as much as cheap, beat up China names? Probably not. But with regard to the space that it's in, a cheap, a more reasonable, more palatable name for the growth. But it's probably the one I like the best of the high growth names. I mean, again, the best way I could say it, if there's a name that people probably should go nuts about, it's this name. Yet they already went nuts on Beyond and Zoom and Crowd, and I don't know, help me out. Did they go nuts on Fiverr? Maybe not. There's a couple others they went nuts on. So, there's only so much money sloshing around. That's the problem. And if people already, basically blew their wad on inferior companies, guess what? They don't have much left to buy the better company. But that's kind of where my position, hey, I didn't waste any money on Beyond and Zoom and all these other things, Crowd, so I got plenty of ammo. If I want to go after work, I can go after work. And I think they're a better name than all those other. Of all the newer IPOs, I think it's the best one by far.
All right.
It's just a matter of not paying so much for it that you step on a deal where where you gotta this thing does go to 30, or it takes 2 quarters to kind of grow into itself. But that's okay. I mean, it just you just have to define your time frame. I think that's the biggest thing too. If you really like this name, and you have my view that man, this thing could be a huge company someday, you have to define your time frame. So if your thesis is that, hey, for example, I had people that didn't do very well in Workday because they didn't want to own Workday for the time period it took for Workday to triple or quadruple in size, both fundamentally and from a stock perspective. So if you have a 2-week time frame and you think Slack's going to be a huge company someday, it's probably not going to work. But if you have a time frame that fits your thesis, then the odds of your trading success are much higher.
And as far as Elastic, ESTC, where's the buy level that you're looking at for this one? Is it back down in the lower end of its IPO range?
That one it's probably at a price that I could post something on it here.
So around 74, 75?
Yeah, honestly, I mean, it's not. Here's what I worry about. Okay, so let's say something like a Zscaler, which I am short right now. So let's say something like a Zscaler goes to 60. Is Elastic going to hold 74? I don't know. My gut says probably not. So because if Zscaler goes to 60. What does that mean Okta's trading at? What does that mean Mongo's trading at? What does that mean, XYZ Roku's trading at? On and on and on. So, I mean, some of these stocks are completely, I mean, the one thing I want to stress is how crazy some of these stocks truly are. I mean, they're truly crazy. I mean, Vive is not even a high growth stock anymore. I mean, Vive's like a 20-25% grower. I literally have no idea why people are still buying Vive or why they bought. Now, they say, well, hey, I'm buying the stock's working. It's going up. Well, I was a broker in 99. I had clients that used to say, hey, buy me Yahoo. I'd say, why? They'd say, because it goes up every day. I'd say, no, don't want to do it. I got a document that I don't want to do it, but if you want to do the trade, I'll do the trade for you. Guy blew up his account. I mean, I got, a lot of stories like that. So if your premise is that it's a great stock or it's a great company because the stock price goes up a lot, you better go do some homework, because that's not how stock prices work. It can look easy for a while, but when the rubber hits the road, there's a lot of risk in these things. And hey, if you don't believe me, listen to Mike Wilson. He's made pretty good calls. Don't believe him? There's plenty of other guys that have made pretty good calls. So, there's no way, I could win a $300 million lottery, and I would not put $1 in beef. Now, I might end up shorting a lot. I might short more beef. But, I mean, it's buying Vive here, in my view, in most of these cloud names, it basically, you might as well take money, put it in a fireplace, and light it on fire. Now, it could work. Trade could work. But that I would say that's the equivalent risk. And I just don't think anybody has any clue or anybody has any respect for the risk of this group of stocks right now. And by the way, you don't want to believe me right now? We go back and look at my stuff on FANG last year. There weren't very many people saying FANG could drop 50%. I think I made that exact call. I'm pretty sure I said, look, if you want to own these FANG stocks, you better be prepared for a 35 to a 50% decline from where they're trading right now. 3 months later, they were down 41% as a group. So the only difference is, are the cloud stocks more risky than FANG? I would say way more, because FANG is Facebook and Google. Okay, that's NVIDIA was pretty dicey. It's held value pretty well. But again, NVIDIA 300 went to, that was the biggest decliner. They went down 55, 60% from highs. So, and that's the broader FANG, by the way. The broader FANG was down 41%. So, but yeah, Google was relatively safe. That shielded FANG. Facebook is still a monster, relatively safe. These cloud names don't have near the stability of most of the FANG companies. The highest risk FANG name was probably Netflix. And Netflix at last year's highs, I wouldn't put as nearly as risky as most of these cloud stocks at recent highs. Not even close. Not even close. So anyway, just to, that's, I don't think I can make it any more clear than that. And likewise, a lot of the stocks that have not done very well, hey, maybe they appear risky because they've suffered big declines in price. I don't know. I always think about what's the trade from here and now. Where is it? I'd much rather be a name that's already taken pain than try to, thread the needle and hope my stop works in time or something like this. Because stops work intraday. Stops don't work if you have gaps. So, some of these things. I mean, I guess, you could use a married put strategy or something. But that gets very expensive too. I mean, if you want to start hedging, hedging positions ahead of key events and things like that, relative cost of puts is roughly 3%. Well, you do 3% on your positions 4 times a year, there's 12, 15% gone. You do that 3 years in a row. Okay, you're gonna hedge all your positions all the time and pay 50% over a 3 or 4 year period? Probably not. Doesn't work either. So anyway, the bottom line is, this market is in a state where there's some exceedingly good opportunities. Those are things that are not trading well. By the way, a little name like PYX, they actually had a pretty good earnings report. I need to email a guy. Somebody asked me about PYX, but PYX actually had a pretty good earnings report. Stock did nothing but go down. And this is a cowboy stock. I mean, this is, I think I even used that term. And they're up 30% today on an upgrade. By the way, the analyst that put the target on, I kind of think that target makes some sense on relative valuation metrics. $71 target, by the way, on PYX. Mm-hmm. So, the bottom line is, there's a lot of stuff. Things can change a lot. Markets are not efficient. Markets are inefficient. Roku. I mean, Roku's another. Roku hit, hit 110, 107. Okay, that was, again, I liked Roku fundamentally. I still like the company from a thematic standpoint. I've said several times I should have been a buyer of this between 30 and 32. Had I done that though, would I still have it here? No way. I mean, I'd have doubled my money and I'd been gone. I'd have made, that run to 60, 65, 70-ish, boom, gone. Take my money and go. So, I mean, there's another one. I mean, that one has a longer runway. I mean, if there's one people want to get kind of crazy about, and that one I could make a case that, hey, could Roku be a much larger company in 5 or 10 years? Sure, it could. But man, they've priced a lot of it in already. Anyway, not to belabor this point, but I just don't think people have a concept of the risk that is contained in these stocks right now. Just like they didn't have much of a concept of the risk of FANG last year. And people say, well, hey, look at most of the stocks are kind of back to where they were. Most people probably can't withstand. I mean, I can hold a stock for 30 or 40% decline and not change my view on it that much. I don't think most people could withstand a 41% drop in FANG and hold them all the way through, and then 8 months later say, hey, they're okay because I held them. Given the comments I get from a lot of briefing people, on relatively small declines in stocks, let alone 25 or 30% declines in stocks, I don't think most people are holding those names through. But yeah, I mean, we'll see what happens. I still think going all the way back to your NASDAQ question, I don't think we've hit cycle highs because the main reason I say that is just way too many parts of the market have been left out. The indices have gone up a lot on a very small number of names getting exceedingly expensive. So that usually resolves in one of two ways. Either resolves like it did last year, or you finally get a rotation. I mostly deal in tech. I mean, we're not even talking. I mean, look at the oil patch. Look at retail. Look at biotech. I mean, there's lots of stuff I look at that I haven't done a thing with where I thought a price was good 4 months ago, and let's say in some oil name, and they take another 35 or 40% out of it, and then they haven't had any bad news. So, but anyway, I think the stuff's going to resolve one of two ways. Either you have a cloud demise that's shocking, takes everything down. You finally have this big down leg that everybody's worried. The few bears are worried about. I don't really think that it could happen. I mean, that's kind of what December did. November, December, they took everything down, but then you got a pretty vicious bounce. And FANG hasn't really led. I mean, FANG's recovered okay, but a different group of stocks did have led. I think it's more of a rotation. I mean, you get, the other big issue I'll wrap up with is Fed versus tariffs, China, or let's call it trade deals versus Fed. I think trade deals are far more important than the Fed, personally. In fact, the Fed's another risk. Could they cut 50, then cut another 25? Jim, you probably know these stats. I think it's like 100% odds of a 50 basis point cut in July or something. I think I heard that on CNBC. You know these kind of things better than I do.
No, I don't think it's not 50, but
okay.
But, yeah.
But isn't it super high odds of a cut just in July?
Yeah, 25 basis points.
Okay. So that's baked in. Here's my view. I'd be surprised if the Fed cuts more. I think they probably will do a courtesy cut, like 125er. I don't know. If the market's trying to price in a lot more than that, I don't know. We'll see. And the market is right a lot, but it's definitely not always right. The bottom line is the trade issue is the bigger deal. I'd much rather bank on a trade eventually getting normalized again than own stocks hoping for 50 basis points of Fed easing, personally. Now, by the way, if you get both, there's your recipe for a much higher market. But is it going to be the stocks that everybody's piled into? The last thing I'll say is, what has killed people? It's when everybody gets on the same side of the boat, right? Okay, the VIX, the perma short on VIX blew people out. FANG blew people out. Blockchain, or not blockchain. What was the thing with Riot and the whole Bitcoin thing? Blew a bunch of people out, right? From the top. I'm missing one of the bubbles. We've had one of the bubbles. I guess this artificial meat it's probably another one. But anyway, when you get everybody on the same side of the boat, and man, there's not much room left, is there? So that's kind of my view. I don't want to be on the same side of the boat with everybody else. So maybe I don't make money every time the NASDAQ goes up 20 points. I don't really care. because I'm not going to be on the same side of the boat with everybody. So anyway, I'll cut it down. 9:45. I've been on a rant, but I think this is a good time for that rant. Maybe not many people are going to listen to it, but I think the few people that do, I think it'll be it'll be good for them. Because I don't miss too many big calls. I think the cloud, the elevation, the pricing of cloud stocks is at levels that have surpassed the danger levels of the FANG highs last year.
And just for what it's worth, there was some comments from the Fed's Bullard, and basically he said that the 50 basis point cut is unnecessary in July, so basically takes that off the table. So that's where we're at.
Well, good. Real time. Prove my point. Real time. Love it.
All right. So last thing for me, do you have any thoughts on Micron heading into earnings tonight?
I really don't, because this would be one of those stocks I'd much rather own. I don't have any Micron. I've kind of been waiting on it for a while. It's okay. I like it. I don't love it. On some kind of a drop, they have been very immune. Well, they were pretty immune, but they've had a pretty good decline from 42 to 45, haven't they? But they've been pretty immune. It seems like when they go into something and the price has already dropped, they've been kind of immune to bad news. So like the last quarter, they were kind of immune to bad news. They're probably going to miss. They're probably going to guide lower. I think how the stock's probably going to react based on how much lower do they guide. So we'll see. But I think right now, this would be a name I'm constructive on. It could go lower. I don't think it's going to get dangerously lower. But even if the thing were to go down 20 or 30%, I still think it's a way better long than tons of other things. You get a China deal, this thing's $50. It's not $50 instantly, but I think it's $50 in a couple quarters. I don't know. This thing could go to 45 fast. God, now that you've mentioned this, here's my playbook on it. I think what I'm going to do, I have looked at this a few times in recent weeks. I think something like this would be a good option bet, especially if it peeled 10, 15%. I'll tell you the price I like it. I would love it if the algos made everybody believe it was going to break the December low, which is 28, 29, something like that. So I'd love kind of a tease. So something that looks like, oh my God, oh look, oh God, they're going to take it to that low, but it doesn't go quite there. So like 29.30 would be nirvana. I kind of, because I usually when I want a price like that, I usually don't get it though. But yeah, I think they missed. I think they guide lower. It's probably largely in the stock, but there's room. I think there's room. It could go down, especially if the guidance commentary is pretty rough.
All right, Sean. Well, I think that is enough for us to digest for today. As always, I want to thank you for providing some color for us, and we'll look forward to you next week. Don't big time me.
So that's it. You don't have any. Usually, you have a witty comment or something.
Well, of course, yeah. You big time me last week. Too busy for me, so got to make sure that I get that on the record that you were big timing me last week.
Hey, you did it. You got it. But no, like I said, I think it is a good market. I'll close on this too. It's a good market to have liquidity. Trading's been pretty good, and so we kind of switch. We all have to switch streams a little bit. Sometimes long-term trades are working better, sometimes short-term trades. But it's just that the volatility. There's the biggest thing I like from a trading perspective is you're getting. It seems like they're trying to probe bounces now, and on the short, same thing. The highs are giving way. They're kind of probing downside. Things bounce, but you put it this way, you're starting to get higher lows on the beaten up stuff. You're starting to get lower highs on the most expensive stuff. That's kind of nirvana for me. So we'll see.
All right, sounds good. Well,
G20 this weekend, right?
yeah,
That's the
indeed.
next big event.
Yep, so we'll be on the lookout for that. Maybe you'll give us some color on what came out of that meeting and see if any of those 5G stocks take off in relation to that one. So, all right, Sean,
All right, later, bud.
thank you so much.
All right, see you.
All right.